Mining giant Fortescue Metals has announced plans to decarbonise its iron ore operations by 2030. Joining me now is business reporter Edward Boyd. Ed, Fortescue says it will invest more than $9 billion building batteries and greening its fleet of machineries, vehicles and trains. 2030, it's pretty soon.
It's pretty soon, Tom. It's a pretty ambitious announcement here from Fortescue Metals. Their executive chairman, Andrew Forrest, made this announcement just a couple of hours ago over in New York. But you can see on the screen here, $6.2 billion US dollars. It's about 9.2 billion Aussie dollars invested over the course of from basically now till 2030. But the bulk of the investment will be from 2024 to 2028. That's going to result in about 1.2 billion Australian dollars worth of cost savings each year. And those cost savings will come from 700 million litres of diesel not being used by 2030 and 15 million gigajoules of gas being saved by 2030 per annum as well. And that will result in about avoiding roughly 3 million tonnes of carbon emissions each year. If we go to the next page, you can see the breakdown of where the money will be spent. A bulk of it, about almost 5 billion Aussie dollars, will be spent on renewables, so battery storage and infrastructure. They need to generate about 2 gigawatts to 3 gigawatts worth of renewable energy. And to put that in perspective, Eraring Power Station, the biggest power station in Australia, is about 2.8 gigawatts. So they need to generate a lot of renewable power. A bulk of money will also be spent on site-based infrastructure, demand response, and the green fleet itself. Roughly $2 billion will be spent on, changing all those big diesel-powered locomotive trains, iron ore trains in the Pilbara, moving them onto green energy, moving all the equipment, the earth-moving equipment onto green energy as well. So it's a pretty ambitious announcement here from Fortescue Metals, and I'll be speaking to the executive chairman, Andrew Forrest, a little bit later today to get a bit more detail around how it's actually going to play out over the next 8 years, Tom.
Yeah, well, it's a lot of money, isn't it? They are putting a figure on a lot of those things, I guess. We'll see what the market thinks of that. Ed, meanwhile, some big interest rate news this week out of the UK and the US.
Yeah, we've got two huge cash rate decisions this week. The Bank of England is making its decision on Thursday. It was meant to make the call a week ago, but it's been delayed for 7 days due to the passing of Queen Elizabeth II. So we'll hear from the Bank of England governor overnight on Thursday. They're expected to lift their cash rate by 50 basis points. And then also on Thursday, we'll hear from Jerome Powell, the head of the US Federal Reserve Bank, and they're expected to lift their cash rate by 75 basis points, which would be another massive increase to the cash rate in the US. It's all due to rising inflation. So at the moment, markets around the world have been in a little bit of a holding pattern this week ahead of these announcements that are coming out at the back end of the week. Our stock market today, though, is up pretty strongly. It's up 1.1%, but it's been under a lot of pressure over the last couple of weeks, Tom.